What if I told you that the metal sitting quietly in the shadows of gold could shock the world, and most people wouldn't see it coming until it's too late? What if the next historic wealth transfer doesn't start with Bitcoin headlines or stock market euphoria, but with silver quietly breaking every assumption you've ever had about it? Right now, while most investors are distracted by short-term noise, CEOs inside the precious metals industry are sounding alarms. Not hype, not rumors, real warnings. They're talking about a silver supply crisis we've never seen before, not in our lifetimes, not even in modern financial history, and tied to that warning is a number that sounds almost unbelievable at first: $150 silver. Now, before you roll your eyes or assume this is another wild prediction, pause for a moment. Because this conversation isn't about price hype. It's about math, supply chains, industrial demand, and human behavior under pressure. It's about understanding how markets actually break, slowly at first, then all at once. Silver is no longer just a precious metal. It's an industrial lifeline. It's embedded in solar panels, electric vehicles, medical equipment, semiconductors, military tech, and green energy infrastructure. And here's the twist most people miss. Unlike oil, unlike copper, unlike even gold, silver is being consumed, not recycled fast enough. For decades, silver prices have been suppressed by paper markets, misunderstood by retail investors, and treated as gold's cheaper cousin. But something has changed, quietly, structurally, permanently. The physical silver market is tightening at the same time global demand is accelerating. That's not a cycle, that's a collision. And when collisions happen in finance, they don't ask for permission. In this video, you're going to understand why CEOs are openly talking about supply shortages, how silver could realistically move toward triple-digit prices, and, most importantly, what this means for you. Not as a trader chasing charts, but as a real person trying to protect purchasing power in a world where money is losing credibility. This topic matters right now because the decisions being made today by governments, industries, and central banks are locking in outcomes for the next decade. By the time silver hits mainstream headlines, the opportunity won't be gone, but it will be radically different. Think of this as pulling back the curtain before the crowd rushes in. Stay with me, because by the end of this, you won't look at silver or the global economy the same way again. Let's be honest for a moment. Most people don't feel like they're bad with money. They feel like the system is rigged, confusing, and constantly changing the rules. You work, you save, maybe you invest a little, and yet everything feels more expensive every year. Your money doesn't stretch like it used to, and somehow, despite doing what you were told was responsible, you're still falling behind. One of the biggest financial mistakes people make isn't reckless spending. It's trusting outdated assumptions. Assumptions like cash is safe, inflation is temporary, precious metals are old-fashioned, or the big one, if something was important, everyone would be talking about it. That last one is dangerous. Silver is a perfect example. Because while mainstream investors ignore it, industrial demand doesn't care about headlines. Factories don't stop needing silver because CNBC isn't talking about it. Solar manufacturers don't pause production because retail investors are bored. Here's the reality check. Silver supply has been running deficits for years. That means more silver is being used than mined. Normally, above-ground stockpiles would fill the gap. But those stockpiles are shrinking fast, and much of that silver is locked into products that aren't economically recyclable. At the same time, investors assume silver will always be available. That assumption worked when demand was stable and tech was simple. It does not work in a world pushing aggressive electrification, green energy mandates, and digital infrastructure. Ignoring this problem doesn't just mean missing an opportunity. It means being exposed. Exposed to inflation, exposed to currency debasement, exposed to a system where real assets quietly reprice while paper assets struggle to keep up. Most people only wake up after the move has already happened. They buy at emotional highs. They chase headlines. They tell themselves, I'll look into it later. Later is expensive. The uncomfortable truth is this: financial crises don't announce themselves politely. They build beneath the surface while confidence remains high. And silver sits right at the intersection of industrial necessity and monetary distrust. If you ignore that intersection, you're not being cautious. You're being blind. To understand why $150 silver is even a conversation, we need to strip away the noise and focus on the core mechanics. No jargon, no hype, just fundamentals. Silver has two identities. First, it's a monetary metal, used historically as money, a store of value, and a hedge against currency debasement. Second, it's an industrial metal, one of the most electrically conductive, thermally efficient, and reflective elements on Earth. That second identity is where everything changes. Unlike gold, which mostly sits in vaults, over half of all silver demand comes from industry. When silver is used in electronics, solar panels, or medical devices, much of it is lost forever. It's not melted back down, it's scattered in tiny amounts across billions of products. Now let's talk supply. Most silver is not mined as primary silver. It's a byproduct of mining for copper, lead, and zinc. That means silver supply doesn't respond quickly to higher prices. If copper demand slows, silver production can fall, even if silver demand is exploding. That's a structural bottleneck. When CEOs talk about a supply crisis, they're not guessing. They're looking at declining ore grades, rising mining costs, geopolitical risk, and long development timelines. New mines take 10 to 15 years to bring online. Demand can spike in months. Price is what balances that mismatch. So when people hear $150 silver and think it's crazy, they're assuming today's conditions remain static. Markets don't work that way. They move in jumps when pressure builds too long. Silver doesn't need perfection. It just needs reality to catch up. Let's go deeper, because this is where theory meets real-world behavior. Imagine a solar manufacturer. Governments are subsidizing clean energy. Demand for panels is exploding. Silver is a critical input. If silver prices double, does the manufacturer stop production? No. They pass the cost along because silver is a tiny percentage of the final product, but an irreplaceable one. That means demand is price inelastic. Now apply that logic across EVs, data centers, defense systems, and medical tech. Silver demand doesn't disappear when prices rise. It becomes more competitive. Meanwhile, investment demand wakes up late, but hits hard. When investors realize physical supply is tight, they don't buy slowly. They rush. That's when paper markets struggle to deliver real metal. Historically, silver doesn't move smoothly. It explodes, then consolidates at higher levels. And each explosion resets what people think is normal. The practical insight here is timing and positioning, not prediction. You don't need to catch the exact bottom. You need exposure before the narrative shifts. Silver rewards patience, not panic. Let's clear the fog. Myth 1. Silver is too volatile. Reality. Volatility is the price of asymmetric opportunity. Stability rarely changes lives. Myth 2. If silver was really scarce, the price would already reflect it. Prices lag fundamentals, until they don't. Then they overcorrect. Myth 3. Paper silver is the same as physical silver. In normal times, maybe. In stress, absolutely not. The biggest mistake people make is waiting for confirmation. By the time something feels safe, the upside is already diluted. Another mistake is going all in emotionally. Silver isn't a lottery ticket. It's a strategic asset. Clarity beats excitement. Always. Here's a grounded, realistic approach. First, educate yourself beyond headlines. Understand supply, demand, and the role silver plays in your broader financial picture. Second, decide your exposure. Not everything, not nothing. An amount that lets you sleep at night. Third, think in time frames, not days. Silver moves in cycles, not tweets. Fourth, prioritize ownership over speculation. Understand what you actually hold. Fifth, stay consistent. Markets reward those who prepare early, not those who react late. No hero moves, just disciplined positioning. If this conversation helped you see silver and the financial system a little more clearly, that's exactly why this channel exists. No hype, no panic, just grounded, honest breakdowns of what actually matters. When you like the video, share it, or subscribe, you're not just helping the channel grow. You're helping push better financial conversations into a noisy space that desperately needs them. This channel is about long-term thinking in a short-term world, and if that resonates with you, you're in the right place. We're building a community that values clarity over chaos. Here's the takeaway I want to leave you with. Silver isn't about getting rich quick. It's about seeing clearly when others are distracted. It's about understanding that real shortages don't scream. They whisper, then snap. A $150 silver price isn't a fantasy. It's a reflection of pressure, mispricing, and delayed reality. Whether it happens fast or slow, the forces behind it are already in motion. The question isn't whether silver will matter. The question is whether you'll be paying attention before everyone else does. Because in every financial shift, there are two groups, those who prepared and those who explained afterward why they didn't. Choose wisely.